first time.
So welcome to episode 50 of Talk Your Chart. Not everyone thought we'd get here, but we have. And since we got here, Brett will be drinking coffee today for the first time ever. And because Brett will be doing that, I now have to run a mile.
Congrats, man. We just looked at the time. It was 8 minutes and 1 second. How do you feel?
Incredible. No, I feel bad. I'm glad with the time. I was more worried about the time than I should have been. But my body still doesn't feel good. And I hated the whole thing.
Well, now you get some coffee afterwards.
I know. Time for coffee.
So we're here at the first coffee place, Versailles. It's a Cuban restaurant. It's been here forever, right?
It's been here forever. This is quintessential Cuban coffee spot. We're doing 3 spots for coffee. This is round 1. Versailles, Cuban coffee.
Cafecito? Is that what they call it?
Cafecito.
Okay,
Here we
let's
go.
give it a try.
Alrighty.
Place number 2, second coffee. This one is
Graciano's, nice Italian espresso, delicious. I think you're gonna dislike this one more than Cuban because it'll be less sweet, but then we'll let you put sugar in it after. You try it first.
lots of sugar, yeah.
Yes, exactly.
Let's give it a try.
Alright, no bathroom. Alright, so stop number 3. After a little Cuban coffee, Italian espresso at an Argentinian restaurant, we're now at Starbucks, man.
Starbucks. I want something super sweet, something that tastes like dessert and coffee.
How strange, you're gonna like this one the best.
I think so. We'll see.
I'm underwhelmed, but Starbucks it is.
Just finished coffee number 3. Best of the 3 so far, I have to admit. Probably because it has the most calories.
Yeah, that was a milkshake, but apparently there was coffee in it. So there you go, little coffee milkshake.
Now episode 100, you can do more, right?
Yeah, I'm not gonna run
Something
a
works.
single mile or inch more, but yeah, on to 100.
See you. Thank you. Welcome, everyone. Episode 50. This is Brett Decaf Horowitz along with Marcos Trackstar Segura. So we just finished our exciting episode, Marcos, where we ran the mile, we drank the coffee. I think it's safe to say that you will not be running more miles in your future, and I will not be drinking more cups of coffee in my future. Is that safe to say?
I was upset before the first quarter mile finished.
Yeah, I think if we had a drinking game where every time you said the word stupid, we had to drink a shot. Before the race, before the run, after the run, and probably during the run, you thought of that every 5 seconds.
Running is not for me. I'm glad it's for other people, so I don't have to do it. That's all.
So what are your reactions? You did really well. You know,
Well, I did well on a relative basis, I guess. In my mind, you have to do less than a 10-minute mile. So that's where I kind of set the line. Can I do it in less than 10 minutes? I was honestly very nervous. I thought I could very well not do it in that time. Once I started mentioning it to folks, they were pretty confident that I could. And I ended up getting, I think, 8 minutes and 1 second.
I think that helped. The pressure that people put on you. Like, I think you would have lollygagged a little more had you not had that.
You took a poll. Was it like 25 or 30% thought I wouldn't do it?
Yeah.
Haters.
75% said you would. So we were right on that. What about any kind of issues afterwards? Any kind of tightness or?
You know, it's funny you mentioned that. I'm dealing with some right leg pain
Ooh.
as we speak. It happened to me. So admittedly, I did go to the gym. It was leg day. I do a leg day. But after leg day, my right leg is suffering from some numbness that is very atypical. And I'm gonna go ahead and blame the running, even though it was about a week after the run.
Oh, so here I thought I was doing a good deed for you, getting you in shape, getting your heart rate going, and
Get
now
you
maybe I damaged you
you
forever.
you pick something that you know I don't like doing. That's why you did that. Don't come on, man.
It
Pivot
was
to the
fun.
coffee.
It
How
was
was your
fun to
coffee?
watch.
For all the Cubans watching out there, how which was your favorite cup of coffee?
The cafecito with sugar, the Cuban coffee was the best. I gotta tell you though, I mean, the number of times people ask me afterwards, like, so did you go to the bathroom? When did you go to the bathroom? How much did you go to the bathroom? I was like, I didn't go to the bathroom. Like
It was a
everything was,
big disappointment. Your physiological durability was
well, look, the coffee was better than I thought overall. If I was stuck on an island, all they had was coffee beans, I could get by drinking coffee every day. It just not be part of my routine.
I know. It was fun.
You
You
know
drank the
that,
three
yeah.
coffees.
Now
I
look,
wish I would have,
for
yeah.
episode 100, you're not going to run a marathon. I'm not going to drink 1,000 cups of coffee. Like, we're not going to make that a thing, right?
No, it's definitely not a thing. I'm not running any more than that. You know how absolutely thrilled I am that I didn't by mistake say that I would run a 5K. That would have been such a nightmare.
Well, we have 50 episodes to figure out what we're going to do next time.
I know. Yeah, let's not even talk about new ideas. Let's talk about whatever chart you have for us.
Okay, you want me to head us off here today?
Do it.
Okay, chart number one. Big news came out in the last few weeks with inflation data out of European Union, the EU. Okay, inflation had dropped. I think it was 7 consecutive times, if I recall. Um, yeah, 7 straight monthly declines. In fact, December though it jumped up from 2.4 to 2.9%. It was 2.9 back in October, went down to 2.4, back up to 2.9. It's not anything to get worried about, at least at this point, because it's 1 month that's down out of 8. Doesn't suggest we're going back to 10% like Europe had back in October of 2022. But it does suggest that maybe Europe raises interest rates a little bit slow. I mean, lowers interest rates a little bit slower. Maybe instead of doing it in March, they do it a little bit later in June. Maybe some of that, parlays into what's happening in the US. But I don't get worried about one data reading, but if it's more than one, then I guess you start to get concerned.
Yeah, I also think this probably has a lot to do with the impact of what's happening militarily over there that is going to impact Europe a lot more than it is the US. The Red Sea is a big deal for Europe because now instead of taking that Red Sea shortcut, all these containers have to navigate the Cape of Good Hope, which adds a ton of cost. And from what we're reading, and what I'm hearing, that's going to be a big impact on Europe much more than it is the US. So I think that's a data dependent type figure, right?
Yeah, the other thing is that I think some of the countries have been giving the citizens subsidies for their energy prices. I think they've stopped doing that now. I also read that food prices rose a little bit. So something to keep our eye on. If it bleeds over to the US and continues month after month, maybe that sticky inflation you call for is going to come to fruition.
Yeah, we'll see. Christine Lagarde, good luck.
Okay. Moving on quickly, one other chart that made the news this morning that I think is very important. We have a fair amount of money custody at Charles Schwab as the custodian. They've been in the news a lot over the last year for a number of reasons. They were in the Wall Street Journal this morning, a big article talking about how their stock is down 24% from the start of last year, down 17 last year, another 7 this year. And a couple of reasons why it's important and why people are talking about them. They cut trading fees last year, right? A lot of ETFs and stocks now, you don't get any fees for trading those on the Schwab platform. They're still not paying a lot of interest rates on money that's sitting there in their just their bank. So you got to move into a money market or something like that to get some yield. And then third, they bought a lot of long dated bonds like a lot of banks did last year. And when rates rose, those bonds dropped. So people are concerned about Schwab. I think we've gotten a lot of emails. You probably have as well. People saying, what's going on? Should I be nervous? We had a long episode last year where we said basically, look, Schwab is okay. They're making a lot of money. You can see in this chart here, while profits and revenues have declined for 3 straight quarters, they're still making a lot of money. The CEO is still buying stock. They still have a lot of cash at Schwab. They'll still be okay. And even if they were to fail for some reason, someone else would take them over. And so I think our clients' assets would be protected. But
Yeah, I almost feel like someone at the Wall Street Journal has something against Charles Schwab because they're the ones that keep taking on the chin. I think that just speaks to his reputation. People have built up Charles Schwab for being an excellent institution for a long time. I think it's fun to break them down. I think if you look at like a Truist Financial Corp, which is smaller than Schwab, but still kind of one of these regional banks, or Regions Financial Corp, or First Citizens, all these names have gotten beat up big time. Just the fact is, when you see First Horizon or Webster or Citizens on a headline, you care a lot less than if you
yeah,
see
for sure.
Schwab.
Schwab, they
So
said, is the largest publicly traded U.S. brokerage firm. So it's a big deal when they suffer big losses. But I'm
yeah,
not worried. Are you worried?
no, I just let Fifth and Third Bank take over some headlines instead of Schwab. But no, no one cares about those banks. So yeah, I think that's enough said, and I think we have a lot of stability beyond the headlines.
Okay.
All right, my
Moving on,
friend.
what you got?
So let's talk about cash, and this plays into some of the issues that banks have been having because people have been taking money outside of checking and savings accounts, and putting them in money market funds. And so what this chart is showing us here, go ahead.
I'm saying count me as another one of those people and all of our clients too. We're putting a lot of money in
Absolutely.
money markets.
Why the hell not? You should have your cash earning 4 to 5.5%. Absolutely. The question always becomes how much should you have in cash, not just in your portfolio, but across your entire balance sheet. So what this is telling us is look, there was this crazy peak of just shy of $5 trillion in money market funds coming into and then out of COVID. That came down a bit, and now as rates have gone up, kind of makes sense. We've seen this massive upswing in the value overall money markets that are now just shy of $6 trillion. Whoa, that's a lot. What's the signal there? A lot of things. One could be that's a lot of money that I bet you is meant to be in the market and could be a tailwind for markets. Who knows, right? Who knows? The bigger point I want to make here is what happens once you reach these peaks in money market funds? And more importantly, how does it look when we get to a peak from a hiking cycle perspective? And that's where the next chart comes in that we've brought here before. And I'm just going to read the headline because it's very explicit. For 7 straight cycles, cash has underperformed bonds in the 2 years after the Fed's last rate hike. So simply put, you are leaving money on the table by having too much money in cash, even when you feel great about it because it's paying you 4 or 5%. It doesn't mean have nothing in cash. It means you should thoughtfully arrive at a cash allocation and then make sure that amount is earning your 4 to 5%.
Yeah, what would be really neat is if there was a chart that we could find that would show the overall allocation of the either the world or the US, investor. And you could say, is this cash that's being is this money market being moved from cash to a money market or from bonds to a money market, where at least you're staying, capital preservation oriented, or is this money moving from stocks to money market, where you're like, man, that's really short-sighted. Maybe it works for the next few months, but after that, you're probably in the hole.
Yeah, absolutely. And let's say the whole 6 trillion is obviously not stock money, so to speak. Say it's half of that and half of that number, whatever it is. You just want to make sure you're not putting yourself in a position to not earn what you're supposed to be earning. And even if it's not 100%, I could all but guarantee that there is money in there that is kind of sitting on the sidelines waiting for the quote unquote dust to settle. The dust isn't going to settle
Well, look at
as we're on new all-time highs on the S&P, the Dow, and the Nasdaq.
look at the last 3 months. Like you would have said, I'll take 5% in money market, and yet the market's up 15%, right? Like, so they're already behind just in the last 3 months.
I know. So take notice, take stock. Money market's good, but what's the price of safety? Last thing, Brett, market Q4 last year was up a lot. So if it falls by 10% over the next couple of months, should you panic? No, why would you? It's normal. It's like the water cycle. Markets get ahead of themselves and they come back. We'll see what the Fed's going to do with interest rates.
Okay, that's your prediction.
I don't think there was a prediction there. That was me just saying something.
Oh, but you're saying that it's gonna, by the end of the year, we just said go to sleep. By the end of the year, you're saying a nice, healthy, what, 9% increase, I think was your call, right?
I think it was 13.
Was it 13%?
Think so.
Okay, good. So that way, right, you don't have to panic when there's a little dip
All right. Cheers to no more running in 2024.
or coffee.